Hi everybody and welcome to today's webinar. I'm joined by my business partner Neil Kilgour from CH4B Limited. So welcome to today's webinar, Neil.
Thanks, Nikki. Hello everybody.
So today's topic is going to be an introduction to mortgage securitisation. So Neil's going to cover off initially what mortgage securitisation is, how it came about, cover off the benefits in terms of the potential claims, and also cover off the next steps should any of you be able to claim and want to find out a little bit more information. So Neil, if you're happy, over to you to introduce mortgage securitisation, and then I can fire some questions at you. We can recap today's session and then cover off how our members can make a claim. So over to you.
Thanks, Nikki. So first of all, if you have a mortgage, then this is a really important webinar for you to listen to. It will be of great value to you. So first of all, mortgage securitisation, what is it? You may well not have heard of securitisation before, and if you have, it may have only been very recently because it's just starting to be announced in some of the press and on television and radio, etc. However, first of all, what is mortgage securitisation? Well, basically, when you take a mortgage with a bank or building society, many of the banks and building societies actually bundle these mortgages up and sell them on to other financial institutions. And that is called securitisation of your mortgage. And basically, in 2007, following the credit crunch, there was a thing called the Basel III Treaty, which meant that banks and building societies were restricted in the amount that they could lend. And I believe that was about 13, they could only lend up to 13 times. So what that meant is that they had to find a way of either selling on these mortgages to bring more revenue into their institutions. And when they sold these mortgages on, they've sold them on to various financial institutions. So it could be that it's been sold on to another bank or building society, or it could be that it's been sold on to a pension provider. And many cases, it's been sold on multiple times. So that's what mortgage securitisation is. Sorry,
Brilliant.
Nikki,
no, that's okay. And you mentioned obviously the mortgage securitisation claim. So what is a claim and what's the claim for?
So basically, over the last few years, it has been established that the process that has been followed in this mortgage securitisation has been done incorrectly, which has resulted in a potential claim for anybody that has a mortgage that has been securitised. And that's what we're talking about today. And we're going to tell you a little bit more about how you can find out if your mortgage has been securitised and what you can do to make a claim, basically.
Because I'm right in thinking that a lot of individuals, our members joining us today, wouldn't necessarily know that their mortgage has been securitised, because it's all done with regards to power of attorney within their mortgage that they wouldn't even necessarily know about. So I think, and we're talking about the large mortgage companies, not the small boutique mortgage providers and the private investors. We're talking about some of the larger, more well-known mortgage providers like the Nationwide, the Santander, HSBC. So if anybody is watching that does have a mortgage, it's definitely worth sort of tuning in, isn't it?
Well, I think you make an important point there, Nikki, that the power of attorney clause in most people's mortgage that they sign, they don't realise that it's there. And that's the rule, I think, that they're using to sell these mortgages on, and then not notifying you, the person that holds the mortgage, that it has been sold on to another provider.
Right. And that's where the challenge is, that there is no notification, and that's why the process and the system hasn't been followed. And I know legal firms have been working on this for over 15 years, haven't they? And now they're sort of ready and confident that there is a claim. It is something that hasn't been followed correctly. And in the way in which the law is and how everything reads, everybody that does meet the criteria could potentially have a claim and therefore claim against their mortgage provider.
Well, interestingly, I've heard that I believe there's 3.2 million mortgages in the UK that have been securitised. So the first thing to do is to find out whether you are one of those 3.2 million. And we'll talk about how you can do that a little later on, Nikki.
No, that's great. Thanks, Neil. So we've touched on and we've sort of skirted around the claim criteria. Would you mind just covering that off for our members and our attendees today of what that criteria is?
Sure. So it's really simple, actually. The criteria is the mortgage needs to be in your name and not a limited company. So if you have a number of mortgages, you can actually put a claim in for to find out if your mortgage has been securitized for all of the mortgages that you have, providing they're in your name. If they're in a limited company, then it doesn't, then you can't do that. So the first thing is if the mortgage is in your name, the first part of the criteria is you have to have had the mortgage with the same company for the last 3 years minimum. And the reason for that is that there has to be at least 3 years worth of interest to be claimed, again, which we'll come on to. So you have to, it doesn't matter if you have changed a different fixed rate or a different policy with them, as long as it's with the same company. And also it has to have at least 3 years remaining on the mortgage.
So it doesn't matter, just on that, Neil, it doesn't matter if they've changed the product, so their fixed rate might have come to an end and they've renewed with the same lender with a new product. That's absolutely fine. It's long as they haven't changed lenders and gone from maybe Nationwide to HSBC, they have to have been with the same lender for a minimum of 3 years. Okay. And they have to have a remaining 3 years on that term. So that term is for the full mortgage on their property, not the term of that product. So if, for example, you're on a 2 or 5 year fixed deal, if there's 33 years left on your mortgage or 25 years, it's that part that we're interested in, not necessarily the term on that current plan. Yeah.
Exactly. The other thing is that the mortgage has to not be in arrears. So if it is in arrears, then you can't make a claim until it's obviously up to date. It doesn't matter if it's been in arrears previously, as long as it's not in arrears at the time when the claim is put in. And finally, there is currently a list of lenders and again, this is something I'm going to come on to later, but there's a list of lenders, which a lot of the larger lenders are on this list. I think there's about 60 odd lenders on this list now. So it would need to be one of the lenders on this list, but a lot of the larger banks and building societies are on there.
Perfect. So just to recap then, Neil, there's sort of 5 really key criteria. So the first one is that it has to be a personal mortgage in your name, not a limited company. I presume that that's fine for joint mortgages. So if it was husband and wife, they both had a joint mortgage, as long as it's in a personal name, not a limited company, that would suffice and meet the terms.
I understand that it can be up to 4 individuals can be on the mortgage details.
Perfect.
But yes, that's right.
Okay, and then the second one is you have to have at least 3 years remaining on your current mortgage.
That's right.
You have to have been with the same lender for a minimum of 3 years.
That's correct.
Okay, you can't be in mortgage arrears. So when it comes to payment holidays, that they don't count. They don't count. Perfect. Okay. So payment holidays are excluded, but as long as you're not in arrears with your mortgage payment, you meet the criteria. And providing that your mortgage provider is on the list of lenders, there should be a claim and you therefore meet the criteria.
Yes, that's right. Now that is to be able to make an application, not actually to make a claim. The first part, this process is done in 2 parts. So the first process is you make an application to see whether your mortgage has been securitized. Once you have established that, which we'll go on to in a minute, then you can actually move on to the claim part.
No, that's fine. Okay. So in terms of there's been a couple of bits and pieces that we've discussed in terms of how mortgage securitisation came about, how you can claim or put forward an application to see whether your mortgage has been securitised. There's just a couple of questions that I know that I had at this point and that has been raised by some of the members that we've spoken to. So I thought now would be a great opportunity to fire them your way. So the first question is all around sort of how much is it likely to cost a member, which could be something that you'll be covering onto. I might be jumping the gun on that question.
No, that's a really good question. So first of all, it would normally cost £260 to find out if your mortgage has been securitised. There's a certain amount of work and a process that has to be gone through to establish whether your mortgage has been securitised. We're able to offer all of our members a token code that they can use, which would reduce that £260 down to £1. And that £1 is paid to PayPal, so it's a secure payment, and it's really just a token payment to identify that it's a real person that they are working with. So we give you a token code, you put that token code into the system, pay £1, and then you wait and with a small amount of information, and then you would wait up to 3 months to find out whether your mortgage has been securitised. Now, normally they say it takes 28 days to find out. The banks have an obligation to respond within 28 days, but sometimes that takes a little bit longer because there's certain delays. They might ask for more information or whatever. So generally we say 3 months. It will be within 3 months you'll get a letter telling you whether it's been securitised or not. I also understand that over 70% of the mortgages have been securitised. So the reality is you've got a 7 to 7.5 in 10 chance of your mortgage that has been securitised.
Wow. Once
we get to that stage, then what would happen is if your mortgage has been securitised, you then have a decision whereby you can do nothing and just know that your mortgage has been securitised, or there's an option where the law firm will take on your case on a no-win, no-fee basis. And they will basically take it on the basis that if they recover any money for you, they will charge 25% plus VAT of any money that they recover.
So just talking on the money and the potential claims, how much are claimants likely to get back? I know obviously we've looked at the interest payments on the mortgage and you have to have a minimum of 3 years, but what could that look like in terms of how much our claimants could or members could receive back?
Well, that's a really good question, Nikki. And I understand that from the first 2,000 claims that were made that have been looked into and calculated what potential returns were available to these people, they believe that the average claim is going to be £110,000. So that's a lot of money. And it's going to, everybody knows about the PPI. A lot of people have money back from the PPI, and this is going to, from what I understand, is going to be the next big thing. In fact, far bigger than the PPI because they're much bigger claims. Now, the claim, if I can maybe explain this part, what is the claim for? I think that's what a lot of people want to know. Well, the claim is actually claiming back the interest that you've paid since the mortgage was securitised. So when the mortgage was securitised, the reality is that the bank that your mortgage is with doesn't own that debt anymore. So why should you be paying your mortgage to that bank or building society? So the claim is to claim back all of the interest that has been paid since your bank or building society sold that debt on to another organisation. And then in addition to that, they charge interest on that money that you've paid. I believe it's 8%, and that's where that total claim figure comes from. So obviously it varies depending upon how long the mortgage has been securitised for, the size of the mortgage, etc.
No, fantastic. And I think, as you say, there are so many variables, but the average based on what has gone through so far is 110,000. So really for our members, for going online, paying £1 through PayPal and making an application to see whether their mortgage has been securitized, there's not really anything to lose at that point, is there?
To be honest, it's a complete no-brainer, Nikki, from what I can see. You know, we've been doing a lot of work with this for the last few months, and the reality is it takes 2 or 3 minutes to input your information, because it's very basic information they need initially. It costs you £1 per mortgage that you have. So if you've got 2 mortgages, it will cost you £2, £3, etc. And that's it. Once you've filled that information out and paid that money, you'll then receive a pack in the post. I believe there's some information you need to sign the form and send it back with proof of, I think it's a copy of your passport or driving license or whatever. But once they've gone through that process and established whether your mortgage has been securitized, as I say, you just sit back and wait for that to happen. Once you get notified, then you can make a decision which way you move forward from there.
And I know from speaking to some of our members that have already put the applications through and done it online, I think the pack came through within 24 hours. They were able to send that off. All you're doing is essentially giving the legal company authority to speak to your mortgage provider on your behalf so that they can access your file and your information. And then I believe from one member, they had their mortgage company just contact them to okay that and just to check that that is fine to release your information. And then the legal company actually go from there and do all of the work on the front end without you having to obviously pay anything to see whether there is a claim. And at that point, you're then notified either way.
Exactly. And you know, at the end of the day, you pay the £1, fill in the information, wait 3 months, see whether your mortgage has been securitized. If it has, then fantastic. You can move forward again on a no-win, no-fee basis. You know, whatever money they recover, they'll take their fees, which is 25% plus VAT, and you'll get a check for the remaining amount.
No, that's great. And I think online there's also a portal, isn't there, where you can actually go in and check the status of your application, which is good. So it shows you the different steps and the levels as to where they are with your application, and how far along they are as to knowing whether there is a claim or there's not a claim. So I know that you've got the visuals for anybody that is looking to claim, where you can just log into a portal online and just check the status of your application.
Yeah, I understand there is a portal available at the moment that takes the applications, and there's a new portal being launched, I believe imminently, which is going to have access to more information so that you can see exactly where your claim is. But it's still very early on. I believe, you know, I think I mentioned earlier, there's 3.2 million mortgages that have been securitized in this country, and so far I think there's about 5,500 claims that have been put through to find out whether they have been securitized at different stages. So it's very early stages.
I've just got a couple of other questions, Neil, just that have propped up from when I've been speaking to members, and I think it's important to address them today. But a couple of members have asked whether they can stop paying their mortgage if they have identified that it has been securitized.
Well, I think that's a good question again. We would definitely not advise anybody to stop paying their mortgage, even if their mortgage has been sold on and securitized and that bank doesn't hold that mortgage. It's really important that you continue paying that mortgage and let the legal team deal with it from their end, but 100% carry on paying that mortgage as you normally would.
Perfect. And I've just got 2 other questions for you. The first one is, if somebody was to put forward an application and they were successful of a claim, could that potentially prevent them getting a mortgage in the future or prevent any other lender lending to them?
I've had a few questions like that actually, Nikki, and that's another good question. Absolutely not. I mean, in this country, we have the FCA, the Financial Conduct Authority. They would certainly not allow that to happen. If you recall, I think from all of the millions of claims that were made under the PPI, I don't believe there was one situation where somebody it affected their credit rating regarding the claim that they made, and the same would apply with this. If you're entitled to the money because it was done incorrectly, then you are entitled to that money, and it wouldn't have any bearing on your credit rating or any future mortgage that you may apply for.
Fantastic. So you actually just answered my final question in with that question, which was, does it affect members' credit rating? So I think for now, that's all of the questions that I've got. Obviously, for any members that are joining us today, feel free to pop any questions in the question section at the bottom of the screen. If any of our members are watching this on catch up, either through the member portal or on YouTube, then do feel free to get in touch with myself or a member of the team, and we'll be more than happy to put those questions forward for you. And I think just moving on, Neil, I think it will be good to cover off what the next steps are. Anybody that is looking to make a claim, how they can do that, and what the next steps in the process is.
Definitely. So basically, it's very straightforward. I don't know whether you've got it on the screen here, Nikki, but you need to visit your MSC, so yourmsc.co.uk. That's the portal where you can put in your information, pay your pound to find out whether your mortgage has been securitized. There we are. So yourmsc.co.uk. All you do is click apply now. Complete the application, which is very straightforward. Takes 2 or 3 minutes to complete. Pay your pound. Now you will when you follow this process, it will take you to a page that asks you to pay £260 or enter a token code. So you will need to enter a token code into that. Have you got the token code, Nikki, to give to everybody?
Yes, I have. So it's S for sugar, E for echo, C for Charlie, and it's 003.
Excellent. So if you don't make a note of that or forget it or whatever, just contact somebody at the team. We'll give you a token code to use. SEC, so that's S for sugar, EC 003. And if you, the other thing is, if you want to share this information with any of your friends, family, colleagues, then feel free to do so. We want to try and get as many people registered as possible, as many claims to go through as possible in the near future. And the other thing is, if you perhaps I should say as well, Nikki, is that if you have a large network of people and you want to become an introducer, then contact us. There's potential there. If you've got hundreds or thousands of potential contacts to introduce, then we can potentially look at that as well.
So I've just popped the next steps and to find out more information. So I appreciate that we've just touched on the subject today. There might be other questions, there might be other things that you're unsure about before making a claim. Even if you have any challenges with the claim process, you will see the contact details on screen. So please feel free to visit ch4b.co.uk and register an inquiry through the website. Alternatively, you can contact me directly, Nicola at ch4b.co.uk, or you can give me a call, drop me a text or WhatsApp. My details are on the screen there. Okay, so thanks for your time, Neil. Thanks for taking the time out today. As I say, we will be uploading today's session on our YouTube channel. So if any of our members are watching back, do feel free to get in touch with myself or a member of the team. And we look forward to hopefully supporting you all with your claims and hopefully seeing if there is a claim and if we can get some compensation back to you for that. So thank you for everybody that has attended today's session. Thanks, Neil, for taking the time out to speak to our members today. We are, as always, grateful for your feedback. So please do feel free to fill out our member feedback form, either following the video or by contacting myself or a member of the team. So thanks once again, everybody, for your time. And I look forward to hearing from you and speaking to you all over the coming weeks. Thanks very much. Thanks, Neil.
Thanks, everybody.